After 2 years of being in a coma, the gold price has finally started to wake up and shoot for the moon. The question now is, could it go exponential? Hello and welcome to Renegade Investor Nation with me, Graham Rowan. I'm also known as the Wealth Pyramid Guy, and later in this episode, I'm going to show you how you can download your own Wealth Pyramid template with full instructions on how to fill it in so you can start to create a structured, well-diversified portfolio that can become the basis of long-term, multi-generational wealth. And there's no doubt that one of the things you're going to need to have in that wealth pyramid is some gold. So let's talk about what's been happening with the yellow metal. You can just about see this chart, and after really kind of trading in a range for the last couple of years during banana syndrome, when you might have thought it would actually do a bit better, we've suddenly seen it explode, really, I guess, on the back of two factors. One is inflation that is raging like it hasn't done for 30 or 40 years. The other is, of course, political uncertainty, or otherwise known as war. And of course, whenever there's a period of scariness, a period of everyone getting a bit frightened about the future, that's when they start piling into gold. And at last, we're starting to see it do what it's supposed to do, which is to be a store of value for troubled times. So I want to look at not only what's driving the gold price now, but what could actually make it really explode to the upside in the coming months and years. So buckle up and take notes, because I think you're going to learn some useful stuff today. So what does drive the gold price? Well, the first thing is obviously inflation, because the more inflation we see, the less value we get from our current money, the fiat money we have to spend. And if you watch my recent video on inflation, I had a look at the Office for National Statistics figures for 2021, and certainly in the UK, if you were a real family living a real life, your inflation figure was closer to 15% than the official figures around 3.8 or 4%. So inflation is massively eating away at your wealth right now. So if you look for something that can prevent that, or at least be a hedge against it, then traditionally gold has a long track record of doing so. And at a time when many people have now been saying that perhaps cryptos, and particularly Bitcoin, are the best store of value, obviously we've seen a lot of volatility there. And although it's kind of stabilizing as we record this in March, we have seen quite a significant decline in Bitcoin. So you'd have to question whether it's really quite there yet as a long-term store of value. You can't question that for gold. It's got thousands of years of track record. But what seems to have really started gold on the move has not been inflation, because we've known about that for some time. Jerome Powell has been assuring us it was temporary, and then he suddenly had to retire that term transitory because it just refused to go away. Don't they realize that Jerome Powell controls the world and that what he says will come to be, except when it doesn't? And that seems to be most of the time. But anyway, what we have now is Vlad the Destroyer coming in, and obviously suddenly it's been an enormous wake-up call, because not only has peace in Europe been shattered after more than 70 years, but it's caused people to realize that not everything they took for granted is actually necessarily going to remain true. And that includes governments like Germany, which has made massive changes to its defense and energy policies, but it also includes individuals who suddenly realize that the money that they've relied on, the fiat currency, could lose value. The ruble lost 50% in 24 hours. So, you cannot trust in the value of paper money, but also the entire political system that they thought they could take for granted has been under threat, not just from the events in Ukraine, but from the events around banana syndrome and the way in which previously democratic governments have shown themselves to be extremely illiberal in their application of their power to try and force citizens to do what they decide is best for them. So that's kind of a bit scary. Now, what could then happen, and that's a result of all the things that are going on at the moment, is a financial meltdown. Because It's all very well people are getting hysterical about all these great sanctions being applied to Russia, but have you ever stopped to think that when we cancel them from the SWIFT system, that means they can't make payments? When we cut off their sales of oil, it means there's no money coming in. So already Russia is talking about defaulting on its overseas commitments. Now, that could mean they're not making a payment to an institution that directly or indirectly might be linked to your pension fund. So before you shout too loudly about more and more and more sanctions, remember there are two sides to every financial transaction. And if you're old enough to remember the late 1990s, specifically 1997, it was a Russian default then that triggered the collapse of a big hedge fund called long-term capital management that brought the world's financial system to the brink of collapse. Now, the question now is, what will be the contagion, as they call it, from these sanctions being placed on Russia? What will be the unintended consequences of hasty, politically driven decisions on the world's financial system? Because I guarantee there'll be some. The only question is, what will there be and how will they impact you, me, the global financial system, and from there, potentially the gold price? So these are factors that might cause the gold price to rise, but there's another side to this coin, because central banks have got to be seen to do something about raging inflation. And depending on whose numbers you believe, the official numbers are 5, 6, 7%. The real numbers are probably 15 to 20%. The energy numbers are just too scary to even contemplate. They've got to be seen to do something. And their political masters will be saying, oi, I've got midterm elections this year. I got to have something I can say about getting inflation under control. So you're going to see some attempt to raise interest rates, the price of money, if you like. The problem is, every time they raise interest rates, that's bad for gold, because gold is this inert metal that doesn't have any yield or coupon or dividend or interest. It just sits there. So obviously, the higher you could get in terms of interest rates on cash, the less attractive it is to lock up your money in the yellow metal. So how high will interest rates go? Well, the flip side of all this is what's going to happen to the economies of the Western countries. Notice I call them countries now. I don't call them Western democracies anymore. I just call them countries. What's going to happen there with the result of the raging inflation we're going to get? Because we already had raging inflation. Now you've got a third of the world's wheat production is trapped in Russia and the Ukraine. Third of the world's sunflower oil comes from there. If we're going to cut off Russian oil, what's that going to do to the remaining, the price of the remaining stuff we can get access to? Well, do you think it's going to bring the price down? It's going to light a fire under inflation. And that then, I think, I can't see how productivity in the Western countries is going to improve over the coming months with all this going on. So that means there's going to be the same amount of stuff with loads and loads of demand, less stuff because of inflation, the same amount of people wanting it, prices are going to skyrocket. So there has to be a limit, you'd have thought, on how high central banks can possibly dare take interest rates without crushing their economies. What I think we're most likely to see now is the good old 1970s stagflation, where you've got prices going up, but GDP not moving. And there's got to be some pushback from people wanting pay rises. So now you're going to have a wage spiral that's going to make inflation even worse. And my own belief is the central banks have already lost control of this. So it just might be possible that a combination of those factors plus the sanctions against Russia and the impact of that on the financial system, because they're basically weaponizing money. They're weaponizing the financial system. And that's going to cause people to lose confidence, and it could easily have some knock-on effects that could trigger a financial meltdown. To some extent, gold can be moved by speculation by investors, and also obviously it can be underpinned by central banks adding to their reserves of it, because central banks are some of the biggest buyers of gold to have it in reserve. And I always think it's interesting when you hear, the Warren Buffetts and co saying what an old relic gold is, but and even central banks who can print as much of the paper stuff as they want, why do they keep buying gold? What do they know? What are they thinking? Well, let's have a look at just how much gold they have. This is a little bit hard to read, but I've highlighted some of the important numbers. This is showing a table of countries showing who owns the most gold and what proportion that is of their overall savings bank, if you like, their overall reserves. Number one on the list is the US of A, holding 8,133 tons. That represents 2/3 of their overall reserves. So 2/3 of America's savings bank is in Fort Knox. Now, we haven't had an audit of Fort Knox for a very long time. So, these are the officially quoted figures. It could be more than that. It could be a lot less than that. But have a look at what's in number 6 on the list. You see Russia at number 5. We'll come back to them in a moment. China allegedly only has less than 2,000 tons, and it's only 3% of their total reserves. Pull the other one, President Xi. I don't believe you. Now, you might be asking, where does Great Britain stand in the league table of gold holdings? Well, you'll be pleased to know that we are languishing down in 17th place behind such giants as Uzbekistan and Portugal, and just ahead of Lebanon. It's embarrassing. And of course, the man who took the great out of Great Britain was Gordon Brown. I have a book somewhere called Gordon is a Moron. I was trying to remember who recorded that song, Gordon is a Moron. Put it in the comments if you remember. Oh, would you do me a favor, by the way? If you enjoy the content on this channel, would you like the video? Would you share it? And if you're not already a subscriber, just press the subscribe button and hit the little bell so you get notified of the new episodes. Thank you. So yeah, we're languishing right down there. Gordon sold it all off at the bottom of the market. But I think what's interesting is the implication to me of that lowly position is that all the successive governments since then have failed to add any significant gold holdings for Great Britain. And I think that's an enormous error. But there have been many errors made by our government over the years, but that I think is an embarrassment to say that we are 17th in the world with our gold holdings at a time of such uncertainty. I do find that incredible. I very much hope that one day we'll have a chancellor with the financial literacy and savvy to actually do something about that. But, I've got my naivety pills sitting here. Don't worry about it. I mentioned Russia. Russia holds 2,300 tons of gold. And that actually, if you want, obviously we tend to think of it in ounces, don't we? Because we see the price expressed in ounces. Well, that's actually 32,150 troy ounces in a ton. So they've got, 74 million ounces. It's worth about $150 billion at today's prices. So I guess they'll be dipping into that at the moment because they ain't got much money coming in. So that's a little warning to Boris and Rishi there. Sometimes it's good to have some savings in the bank and to hold some gold. And if you want to see some other charts like this, some of what I'm sharing with you today came out of a Dominic Frisby article in Money Week, and he got these charts from goldchartsrus.com. So have a look over there to get a bit more information. So what's China really holding? That's an interesting question. Really 3% of their total reserves? Okay. America's is 65%, as I showed you. China's actually the world's largest miner of gold. They produce 15% of all the gold in the world. And they also now own lots of gold mines in Africa. They've been buying up resources left, right, and center from under the noses of the West. This has been going on for decades now. And obviously, they're not only cornering the market, they're making sure they've got those supplies because they're the biggest importer of gold as well. They don't allow any to leave the country. So they make a lot of it, they mine a lot of it themselves. They don't allow that to leave. They're the biggest importer of gold in the world. They have loads of it, 2,500 tons in jewelry. And they have something called the Shanghai Gold Exchange. And this is one of the few things where we can get real numbers. And virtually all the gold that comes into China or gets produced in China has to pass through the Shanghai Gold Exchange. And we know that 22,000 tons has done so since the financial crisis of 2008. So when you tot all of these things up, and experts like Ross Norman have been involved in creating these figures. This total chart suggests they could actually have as much as 31,000 tons of gold in China, which would be 4 times America's declared holdings. And we're not that sure about whether America's holdings are true because there's been no recent audit of Fort Knox. So it's quite possible, even if you took a conservative view and slashed that figure in half, you're still at double the level of America's reserves in gold. So China undoubtedly holds massively more than it's officially declaring, but why might it not want to declare them? Well, that's an interesting question. Here's how I think it could all really explode. You see, one of the big issues for China, as it is for Russia, is historically they've got so much in dollars because they've sold stuff to the West, either manufactured goods in the case of China or energy in the case of Russia. They've been paid in dollars, and they've accumulated, in China's case, $3.2 trillion worth of dollar assets, treasuries, and so on. That's a real vulnerable exposure to them because they are losing confidence in the dollar. You know that 25% of all the dollars that ever existed have been printed during banana syndrome. So clearly the value of the dollar is declining fast, and the value of their 3.2 trillion holdings, the purchasing power of it, is declining fast. So both Russia and China have been de-dollarizing. So one example of that is they just signed a 30-year energy agreement, Russia sending energy to China, and that's going to be settled in euros, not in American dollars. Now, that is just one sign of a deliberate strategy that's going to accelerate over the coming years and put enormous pressure on the dollar to still lay claim to being the world's reserve currency. So I think this leaves the door open for a new reserve currency that could come out of Asia Pacific. We know that China is more advanced than any other country in terms of central bank digital currencies with its digital yuan. Imagine a scenario where that was either wholly or partially backed by gold. That could turn the world of finance on its head. Suddenly, a fiat currency that's actually got some real assets behind it. I mean, we haven't had that since 1971. And if you remember what happened then, it's because everyone was losing confidence in the dollar. The dollar was backed by gold. So they said, I tell you what, just give me the gold. Don't worry about the greenbacks. I'll just have that yellow metal stuff. Thank you. And Tricky Dicky Nixon was forced to close the gold window because everybody wanted to have gold instead of dollars. Well, imagine if you could have gold-backed yuan. The demand for that would be incredible. And if they then declared their true holdings, both the yuan itself and gold would skyrocket in price. So there is that potential for gold, I think, to go exponential. But they're not going to do that yet because they've still got $3 trillion worth of stuff that they need to get rid of. So the question here becomes one of timing. At what point does China show its hand? When do they show their real holdings? Because that's when you could see some exponential growth in gold. And maybe America would have to do something similar. Perhaps they have to go back to at least a partially gold-backed dollar to try and hang on and compete for that global reserve currency status. And the other thing that's likely to happen is a lot of America and the dollar's dominance comes from things like the SWIFT system and that global infrastructure that people are forced to use. Well, if you start weaponizing that and excluding countries from it, guess what? They'll make other arrangements. Even if that means, dare I say it, cryptocurrencies. They'll find another way. And suddenly America will have its legs chopped out from under it because they thought they were smart in weaponizing this system, and people will find another way of transferring value that excludes America and excludes the dollar. So, this is a situation to watch for over the rest of the 2020s. And I would predict at this stage, the dollar would have lost its reserve currency status by the end of this decade. Now, my question of the week for you. Where is the gold price going to be by the end of 2022? Will it be A, below $2,000, B, around about 2,000, C, 2.5, D, 3,000, or E, above 3,000? Put your answer in the comments section and let's see what Renegade Investor Nation thinks is going to happen to the gold price in 2022. Now, your wealth pyramid. I've color coded it to make it even easier to see the 4 different layers here. You've got the bedrock layer. That's where you're going to put things like gold, like your main home, cash, collectibles, things that are going to maintain purchasing power over the long term, whilst all around you is inflated away by the cancerous developments that we've seen in the last few years. But you've also got to put food on the table. So you need a passive income layer. This is where you've got things like buy-to-let property, commercial property, bonds and loan notes, dividend-paying shares. If you've got a sense of humor, this could be interest on bank accounts. Mind you, there are some places where you can get decent interest on bank accounts, but you got to watch out for the currency, places like Turkey. Just be careful with that. But you've got to balance what you're getting with whether the currency is worth anything at the end of the year. Above and beyond that, you need to diversify globally. That means having property and assets in multiple countries. It means having residence and citizenship in multiple countries, having somewhere else to go at short notice. Remember what's happened in the last few months. It's not a joke. It's dead serious. I've been saying it for years. Are you going to listen now? And then at the top, at the pointy end of your pyramid, you've got this high velocity layer where you can have some fun with the frothy money once you've got the other assets in place underneath. And just as a reminder, obviously gold, very much a bedrock asset you should hold. Now, how much are you holding at the moment? What percentage of your net worth is in gold as you watch this today? I wouldn't be surprised if it was 0. I would hope it's actually a few percent. And experts vary. Some people say 5%, some people say 10%. The point is 0 is not the answer. And you can have things like gold Britannias that are legal tender, silver, I suppose I would also perhaps put, if you can't afford to get the gold coins, silver is a substitute for that, somewhat more volatile, but still definitely worthy of a place in your wealth pyramid. So go buy some gold. I can't give investment advice, obviously, disclaimer, caveat, but everyone generically should, of course, consider having some gold bullion. And I mean the real stuff. I mean, yeah, you get ETFs and stuff. I mean stuff you've got in your house. I mean, have you ever held a bunch of gold coins in your hands? Believe me, no digital share certificate or Trezor wallet comes close to the feeling of having a pile of gold coins in your hot, sticky hands. And if you have to leave the country in a hurry, what better way of taking a lot of value with you in a small bag or suitcase than some gold bullion? So, have a think about that. So how about getting your own wealth pyramid and getting started on this? Well, there's 2 ways you can do it. There's a link you can click at the top of the YouTube channel where it says download your wealth pyramid here, or you can just go to grahamrowan.com/pyramid and just pop your details in there and you'll get an email from admin@renegadeinvestoracademy.com. Now, I guarantee the way ISPs work these days, that email will go into your junk. So you will have to whitelist it. Go check your junk mail. It should come through within a couple of minutes of filling in your details. And then this is what you'll see. It's a downloadable PDF. It's 4 pages. It's got instructions on the first page. It's got an example of what assets live in which layers of the pyramid on the second page. I even share my own wealth pyramid with you on the 3rd page, so you can see how my asset allocation is currently looking. And then you've got the blank one on the 4th page that you can start filling in for yourself. So once again, just go to grahamrowan.com/pyramid, whitelist admin@renegadeinvestoracademy.com, download your pyramid and get started on building a nice diversified portfolio that will see you through these challenging times. Thanks very much for watching. I'll see you again very soon.